Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very nice day of trading and a very beautiful weekend as well. And so it starts, guys. Week number 2 of possible extreme volatility. We got through last week pretty okay without any major red flags, got through all of our big tech earnings, and the results were quite good. And we got through all of the macroeconomic data points, and as well, although jobs were slightly weak, we didn't really have any massive red flags. And now we embark on week number 2 of volatility, arguably the largest remaining week until the end of the year. That is for 2 simple reasons, of course. Number 1, we have the elections coming up tomorrow evening. And then number 2, we have Jerome Powell coming to us with an interest rate cut possibly on the Thursday session. So this week should be a wild one, guys. And in terms of the price action today, well, although the markets were ever so slightly down, we didn't have that much volume and we didn't really crack through any major price levels either, which just goes to show traders and institutions are probably sidelined for the moment, waiting for those 2 things, the election results and the results from the Jerome Powell interest rate decision on the Thursday session. So in today's video, guys, a few things to bring to you, of course. Number 1, we're going to go over a few earnings that I have prepared for you guys. And they're going to be number 1, Berkshire, which reported their earnings over the course of the weekend. And number 2, Palantir coming in and absolutely crushing it in the after hours. So we'll take a look at these 2 significantly different companies and give you my thoughts on those 2. Thereafter, we're going to go through some preparation for this week in terms of technical analysis on our major stock market indexes, which levels to look out for, and also on our big tech names and see the levels to look out for there as well. And lastly, wrap it all up, guys, with a glimpse into my portfolio, see which trades that I have for the remainder of the week, which new ones I have opened today as well. So a lot to cover in today's video, guys. Let's jump right into the action. So SPY down about 0.22% and the QQQ is down about 0.29. They were really oscillating between positive and negative all throughout the day, ending unfortunately red. Take a look at the heat map, guys, as well, right? Very mixed and choppy market leading into this week. Most of big tech was down except for NVIDIA. NVIDIA getting a boost because, well, they are now replacing Intel in the Dow Jones. So that was obviously released Friday after the close. But in case you guys didn't see it, they are indeed replacing the Intel in the Dow Jones. And that should be done as of the November 8th after the close, right? But keep in mind, although this is very good for NVIDIA and could lead to a little bit of share price increase, for the Dow Jones itself, it's not going to make a tremendous impact because just remember, the Dow Jones is not a market-weighted index like this where you have, depending on the size of the company, the market cap, right? That is what gives it the largest weight to the index. The Dow Jones is a price-weighted index, meaning that the share price is the largest weight in the index. So as you can see up here, NVIDIA pre-split around $1,100, that would have been a big impact for the Dow Jones, right? It would have become the largest holding. But as of right now, the largest holdings in the Dow Jones by price weighted is United Health, Goldman Sachs, Microsoft, Home Depot, Caterpillar, right? So NVIDIA at about $130, $140 a share, it'll be kind of towards the bottom end of the tier. So although it will help the Dow Jones, it will not contribute to the Dow Jones as significantly as it does to the S&P. So just keep that in mind for those 2 things, right? Now, so the rest of the market, right? In terms of the heat map, guys, well, financials taking a little bit of a bath after Berkshire earnings. Healthcare relatively muted as well. They keep changing the heat map on me. I swear, Google and Meta used to be up here last week, and now they keep rearranging the outlook of this, but the analysis is the same. And they kind of piled all of the bottom half of the market, and most of your consumer defensive sectors are now over here. Very mixed market, guys. A lot of choppiness, a lot of noise, and I don't think that will be resolved much before the election comes through. On the one-day relative, you can see just how choppy the market was. Energy, real estate, basic materials, and defensives having some good performance. To the downside, pretty much everything else, technology, healthcare, and financials, the 3 major sectors of the S&P today contributing to the downside. So we'll see how it goes on for the rest of the week, of course, guys. The volatility, and if you ask me, guys, to predict where this one is going, I'm not going to do it. We're not in the business of predicting the markets at all, guys. Just to give you guys an idea, right? The QQ is possibly going to move roughly about 2.6% up or down by the Friday close. All I can tell you is that it's going to be very volatile. And all I can tell you as well is in the event we come further down into our big support areas, I will definitely be buying, but I'm not trying to predict what's going to happen for the elections, not trying to predict what Jerome Powell is going to say on Thursday either. We're going to react to the levels and bid accordingly in the event that the indexes or some of our big tech names fall into buy locations. It's the best we can do, in my humble opinion. So moving on to our earnings, guys. To start it off, guys, we're going to start off with, I guess we could do Palantir first, because if not, you guys are going to skip over Berkshire. I know you guys. So let's do Palantir first, right? Palantir coming out in the after hours, 13% gain, absolutely fantastic. And I forgot to relabel this. I did change these things over, but I didn't relabel it. So just to avoid any confusion, right? 13% in the after hour, which was literally the expected move. Expected move was about 12.6, and that's roughly what they're up right now. Fantastic performance from Palantir, guys. Beat on EPS by about 10%, beat on revenue by about 3%, and they increased the guide as well. Triple beat by Palantir, and Alex Karp, the CEO, was not shy with his words about the beat. Let's just say that. Palantir shares surge on rosy revenue outlook. Let's have a look. So one of the concerns for Palantir prior to the last 2 quarters, I would say, was the fact that they were deriving a lot of their revenue from government contracts. And now they've been doing an amazing job of expanding the commercial side of their business and getting a lot of company-specific contracts as well. So let's move into the earnings, and I'll tell you guys what I loved. So here's Alex Karp with his very shy take on the matter. We absolutely eviscerated this quarter, driven by unrelenting AI demand that won't slow down. So Palantir CEO Alex Karp, always being super modest and, super formal and super professional, right? So I love him for those reasons, guys. I love the fact that he is outspoken, and when they do well, he's not shy to say it, and it's true. They absolutely crushed it this quarter. Palantir's revenue grew 30% year over year. Fantastic. The growth of our business is accelerating, and our financial performance is exceeding expectations as we meet an unwavering demand for the most advanced AI tech from our US government and commercial customers. With respect to guidance, Palantir called for fourth quarter revenue of 767 to 7071. The midpoint is 769, of course. The analysts were well below at 741. So not only did they crush the current quarter, they absolutely crushed forward guidance. And that's exactly what you want to see from a company that, for all intents and purposes, the valuation is relatively expensive, right? And we know what happens when companies go into earnings with relatively expensive valuations. Companies that have rallied since last earnings over 100%, it is all theirs to lose, right? If the guidance would have come in online or under the expectations, even though they crushed this quarter, Palantir stock would be probably down 10-15% right now. But because they continuously raise the bar, that's what allows them to go and get the nice little bump in the after hours. Let's continue. So the company is now targeting over $687 million in US commercial revenue for the year, implying about 24% of revenue totals. I will remind you, just one short year ago, guys, this number was half. They only had half of the amount of commercial revenue, representing a total percentage of overall revenue. So the commercial side of their business has been growing and flourishing. It's the speed with which institutions in the US in particular have adopted our platforms and AI capabilities more broadly that has been, and we believe will continue to be, the driver of our growth. As America once again forges ahead, our allies and partners in Europe are being left behind. So Alex Karp, his choice of words, right? But I mean, it has to be said sometimes, right? He's trained America all the way, and it's just nice to have one of those a company, such a strong company like Palantir, right? Especially in terms of military defense capacity, it's really nice to have them on our side more so than not, right? So Palantir aims for 1.054 billion to 1.058 in adjusted operating income for the year. That's above the 980 million consensus from the analysts. Why I point to operating income is those are your profits, guys. So they're increasing revenue, but they're also increasing profits. This was one of the criticisms for Palantir for a long time, right? Since their IPO, you can see that when they started, they had negative net revenue from 2019 all the way through 2023. And then look at the last 5 quarters, net ramp in net income right here. And they just closed the most recent quarter at about 20% net income as well. You can see that right here, right? There, did I put it on the chart right there? No, I didn't. Yes, I did. 19.8% net income. So very, very fantastic for net income growth. You can see that right here. Palantir has always had very high gross profit margins, right? But they didn't have very large revenue, but their product minus the cost of goods sold has very high margins. And that's what you want to see for a tech company, especially. Now, when the revenue scales and your operating expenses scale slower than the revenue, that's when you get an increase in your operating margin. Now it's sitting very pretty 2023. And that's also when you get translated gains down to the bottom line. You can see this crazy profitability curve, now almost 20% for this similar quarter, guys. So fantastic earnings from Palantir, growing everything in line with what you'd want to see. Nothing bad to say there at all. So let's just close this off. The one little thing, guys, that's been a bit of a pain point for Palantir is their shares outstanding, right? With the stock-based compensation that they do, the amount of shares outstanding is increasing, but I wouldn't say it's too much of a problem, right? It does increase every single year by roughly, about 5, 6, 7%. So it's not too bad, but eventually when they do grow into that, the scale of the revenue curve, they're making profits, you would like to see the free cash flow start outnumbering the amount of share dilution right now, and possibly Palantir even potentially down the road starting to do the share buybacks, which a lot of tech companies do as well, but we're still a ways away from that, right? In terms of the other highlights from their quarter, guys, I mean, we can go through a few of these slides, but I just want to highlight the main points, just the fact that they absolutely destroyed it, right? So the US revenue grew 44% year over year, commercial revenue 54% year over year, government revenue 40% year over year. Every single metric, guys, is going up in a very, very nice fashion. Operating income, right? 38% net margins, fantastic. Here's the gap from the chart that I just closed, right? You might remember it around 15, 16. It's still at about 16. And there you go. Here's your 20% net margins. Fantastic for the company as a whole. Here, they go on to reiterate how easy it is to convert their clients from when they first present them the products and put them through the boot camp to then securing a, 7-figure deals all around, right? It usually takes about 2-3 months to secure those deals. As you can see, 50 days, 3 months, 2 months, right? So very, very streamlined process for Palantir to present their product and then lock in a potentially multi-year 7-figure plus deal, right? They've been using their technology, of course, in Ukraine to help with demining activities, but not only demining activities, also your UAVs, right? Your unmanned aerial vehicles, and also the drones as well. So for reconnaissance missions, for drone strikes as well. This is going to be the company, guys. They have the best leading technology in terms of being able to calibrate the sensors of the drones and towards the satellites and getting pinpoint GPS locations as well. So military grade technology, guys, from Palantir is world class right now. They are the best in the category by far, especially using AI as a function to improve efficiency on the battlefield, essentially, right? So we just have a ton of very glorious numbers. GAAP net income going up a lot higher, operating income going up a lot higher. We're going to take a look at their US revenue growth. Fantastic. But I want to put you guys in perspective because quarter over quarter, yeah, the numbers are crazy, but you guys need to see the overall curve, right? I kind of showed it to you before. Here's your US customer count. It trails back from 2023. You can see the commercial customers, guys, are going up significantly, right? So representing a larger portion of the business. Customer count is up, commercial customer count is up, nothing to see there. 104 deals closed of at least $1 million. Here you go, 36 of which were 5 million, 16 of which are 10 million. So you guys get the idea, right? More revenue, better profitability, increase in commercial customer count versus government, which was one of the, quote unquote drawbacks of the company roughly a year ago in time. They do not have any of those similar problems today. So fantastic earnings quarter from Palantir. Love to see it as a Palantir shareholder myself. But in terms of valuation, guys, this is where it gets a little bit tricky, right? So commercial expansion is good. Government contracts remain solid. Profit margin expansion, 20% is a new record in Q3 as well. They had 20% last quarter, slightly under this quarter. So a new record for them. But that's kind of where it stops, right? Revenue growth is fantastic, 18% per year. EPS growth is pretty good at 26% per year, but we're coming off zero, right? So I'll remind you where we stand on Palantir right now. The EPS is kind of coming out of zero. So it's normal that we're getting a nice ramp, but you want to see Palantir doing even more cost control and bringing even more money to the bottom line to increase this EPS as fast as humanly possible, because that's the one thing that's really hindering their valuation right now is the price to earnings ratio, right? At 46 bucks, with only a 0.37 EPS on a 2024 basis, it's at a 124. I mean, you can ask me, say, Will, but we're already through 2024. Can you take the 2025, please? Sure, but it's not that much better, right? 42 cents. If you guys want me to do it with 42 cents, it doesn't really change much, right? 46 divided by 42, you're still sitting at about 109 PE. And even if you divide that by their EPS rate, right? It goes from a 4.78 peg in 2024 to like a 4.21 by the end of 2025. So it's still above a 4 peg, guys. Anything above a 2 is pretty rich for a company, guys. Pretty rich indeed, right? The one comparison that I can make for this company growing this fast with a high valuation and very loyal customer base, with similar revenue and, similar revenue profiles, right? I'll just show you, right? So look, Palantir brings in about 2.5, let's say between 2.5 and $3 billion of revenue per year right now, right? And does currently sits at a market cap of roughly, well, before they're closed, they're about $92 billion. Now they're about a bit more. Let's call it they're probably closer to 100 right now, right? But let's just take this one. The one that I can compare it to is possibly CrowdStrike, right? CrowdStrike has a bit less valuation, $73 billion, but they are relatively expensive for where they trade. They were even more expensive at the all-time high. The PEG ratio was about a 3.5, but they are growing crazy growth as well. About a $3 billion per year revenue run rate. They're a bit less profitable than Palantir as well. This is the one closest comparison that I can possibly make between two fast growth companies, right? Look, the numbers in terms of growth rates are almost the same, and they trade at relatively rich valuation. So, and I do like investing in CrowdStrike as well myself. So Palantir right now, it is quite high, let's be honest with each other. And this is coming from me as a Palantir shareholder, right? And we've encompassed all the growth for the next 3 years. So it's not as if I'm not encompassing for the growth, guys. The growth is priced into these numbers. So above a 4, guys, it's very, very tricky to start a position up here. I mean, if we have Palantir shares, I don't really see a reason to sell from the direction of the company alone. Yes, it's rich. So, I mean, there is a case here to possibly write some covered calls or take some shares off of the table potentially if we are expecting an eventual pullback, because all good things eventually do get their own pullbacks, especially on a monthly time frame here. We're trading really, really, really high on the RSI on the monthly. I mean, with this most recent earnings, we're once again going to be plowing into the 80s on the weekly RSI. So Palantir will have an extended consolidation period, right? It's just we don't know when it's going to come. It could come soon. It could come later from 50 all the way down to 45. Nobody knows, right? So to be prudent and cautious, if we're in this from before, it remains a hold for me, but it's a little bit of a high valuation hold right now, right? I wouldn't be opposed. Even myself, I've been writing covered calls on Palantir shares. Trimming some shares is not a bad idea either. If it's a long-term hold for you, the next 5 to 10 years, it's your primary AI play with something like an NVIDIA. NVIDIA, same thing, right? Valuation a bit high right now, but we know the run rate for the next 5 to 10 years is they will be a massive player in the game, right? And that's why I'm holding as well. So if you're swing trading these, not a bad idea to run some covered calls, take some shares off the table, lock in the gains, yes. If you're long-term, well, if you have shares from all the way back here, you're probably just holding at this point, and it's really tough to add to the position up here. I've never opposed to DCAing on the upswings, but up here, guys, it's a little rich. It's a little rich in my humble opinion, right? So that's just my take on the matter. In the event we get a pullback on Palantir into the mid-30s for XYZ reason, right? Overall market pullback, something new specific to Palantir, although I'd be surprised at this point, right? Any reason whatsoever brings us back down into the mid-30s, that is where I prefer swing trading the stock myself. And that's everything on the matter of Palantir, but the company is doing fantastically, nothing more to say there. And now we jump into our earnings number 2, which is going to be Berkshire. So Berkshire getting the opposite reaction after their earnings. They were actually down somewhat above 3% for a majority of the morning before retracing up about 2.18 to the downside. They are almost daily oversold. So what exactly happened to Berkshire? Well, there's a number of different things that happened with Berkshire, right? We'll go over pretty much the key points that everybody's talking about. EPS miss here, an ever so rare miss on EPS by Berkshire by about 4.33%. They did beat on revenue though by about 0.83%. A lot of the miss here, guys, quite simply is just oh no, now I'm going to have to filter through my, I got a lot of these charts open, so just bear with me, guys. I should have probably labeled them. That's my mistake. So a lot of Berkshire's business, I'll remind you, is not just their stock portfolio. They have so many other things right there, right? So Just to give you guys an idea of how many different segments Berkshire operates in, right? You have insurance, a ton of insurance, right? Pilot travel centers, manufacturing, service, and retailing. Then they have their whole energy business, which nobody ever talks about. They have the railroad division. Then they have their equities portfolio as well, their bond portfolio, right? It's a massive company, guys. It's a conglomerate, right? So you can't only look at this list of stocks right here and think that that is what's impacting Berkshire's price. It's really not. It's a combination of many different factors, right? But they did have a miss on EPS, and I'll explain it. I'll explain why. Most of that was due to what happened with their insurance business. I'll get into the article, but just understand that they got hit pretty bad with the two hurricanes. Claims are totaling roughly between 1 and 1.5 billion across the different insurance companies that they do have. So that's what really took a little bit of a hit on EPS for this current quarter, right? So it's an external factor, nothing that Berkshire can control themselves. So I just want you guys to understand that that's a majority of where the EPS miss came from. Now let's get into the article. So Berkshire Hathaway's cash fortress tops 300 billion as Buffett sells more stock and freezes the buyback. So seems like a bearish headline, right? Berkshire raising a ton of cash, freezing the buybacks, right? So let's get into the article and I'll kind of bring some light into why this is currently occurring and where it stands in relation to Berkshire's history. So Berkshire's monstrous cash pile topped 300 billion in the third quarter as Warren Buffett continued his stock selling spree and held back from repurchasing shares. You may hear this at a first glance and think, Warren Buffett is bearish on the market. There's no good deals out there and stuff like that, which is true. He said at his annual shareholder meeting, roughly some weeks ago at this point in time, that there were no significant opportunities to invest the cash at attractive expected returns. Here's what he said. I don't think anyone sitting at this table has any idea how to use it effectively, and therefore we don't use it. So since that annual meeting, he continued selling even more stock. So here is Berkshire's current cash pile. It may seem like it's absolutely ballooning, but as you can see, well, as you may not be able to see because my head's in the way, let me move myself over then. Berkshire has been doing this, guys. They've been building up the cash pile arguably since 2020. They did a little bit of shopping in 2022 as the market was in a disaster mode. And now in the past 2 years, they've been steadily increasing the highest amount of cash, pure cash ever recorded on the balance sheet. However, we have to take into consideration how much cash is this in relation to Berkshire's market cap. It is always a relative analysis. If you look at this, you might think, wow, that's crazy, right? Not actually so crazy at all. They actually had way more cash in relation to their percentage of market cap back in 2001 and also back in 2004 as well. You can see that we're not even above right now 2010 and 2011 levels, let alone 2009. So I would say that in relation to the market cap, we are slightly above average, but nowhere near actual records. The dollar amount itself is an actual record, but in terms of relative value, it is nowhere near being a record. So I think that distinction is one that's very important to make. And on social media and in the media right now, that is not a distinction that many people are making. So now, they raised $325 billion by the end of September, up from $277 billion in the end of the second quarter. Now, the mountain of cash kept growing as the Oracle of Omaha sold significant portions of his biggest equity holdings, namely Apple and Bank of America. Berkshire dumped a quarter of its gigantic Apple stake in the third quarter, marking the fourth consecutive quarter that it has downsized its bet. So here's the stake of Apple shares over time. You can see that now we are only sitting at about $70 billion, which is still huge, but a far cry, cutting it more than half of the totals that they had back here in Q4 of 2023, right? So significantly reducing their Apple exposure. And we've been talking about this on the channel for a while, guys. Apple does not have the same growth rates that they did when Warren Buffett purchased the stock all the way back here. Warren Buffett at this point is up like a 3-4x on the stock, guys. So he is taking profits. If he does not see the same growth run rates, if he does not see the same fundamental value in the stock, Warren Buffett will trim his position. If Warren Buffett is good at one thing, guys, if you have one takeaway from Warren Buffett's career as a legacy investor, you need to understand that this is a man who has, by all accounts and measures, respected the rules of his strategy. If he does not find good deals in the markets, he does not buy. If he has current companies that have ran a lot, he starts trimming the positions if they do not respect his value investing rules. He's a very, very strong rules-based investor. So if you have one takeaway from Warren Buffett, regardless of the strategy that you choose to employ in the market. It is respect the rules of your strategy, guys. Regardless of the market conditions, stick to your strategy rules. It's the best piece of advice that he will ever give you. And it's the best piece of advice that I, as a trader investor, can give you as well, right? Without it being financial advice. I'm not comparing myself to Buffett in any regard. He is the legend. He is the GOAT, right? But you need to respect your rules, guys. That's what's allowed him to have consistency over the last 40, 50 years. It's what's allowed other traders such as myself to benefit from that same consistency. Now, moving on, in terms of what the positions he has reallocated to have been, well, here are some of the notable changes that he did, right? So Apple was 29.6 at the end of Q2. It's now 25.7. He reduced, or actually he increased American Express from 12.3 to 15.1, so he bought more. Bank of America has been reduced quarter over quarter from 14.5 to 11.7. Coca-Cola increased from 9 to 10.6, and Chevron slightly down from 6.5 to about 6.4. So those are the notable changes in the portfolio. So here's where we stand on the portfolio as a whole, right? Now, moving on further, Berkshire shed $36.1 billion worth of stock in the third quarter from those sales. No buybacks. Repurchase activity has already slowed down earlier in the year as Berkshire shares have outperformed the broader market to hit record highs. The company states that it will buy back stock when Chairman Buffett believes that the repurchase price is below Berkshire's intrinsic value, conservatively determined. Usually they had an unofficial rule to where they would only buy back if the price was around 1.6 price to book, which is known as the fair market value of any company is known as the price to book value. So here we got a chart by Forbes. If I can actually get my sizing on these charts correctly and not, fool around too much. Okay, here it is. And then it disappeared again. So I don't know if you guys can see this. Let me try to open it in a new tab. We won't have to deal with this madness. All right, so there you go. So here's Berkshire's price to book. This was done literally over the weekend, so it's brand new data. So 1.64 is the current value of the asset, and usually when it's below 1.2, which is right around where my mouse is right there, 1.5, just take the middle point. Usually Berkshire has done a good job of repurchasing shares, but in the last 2 quarters, as the stock price has surged and the price to book has moved away from that 1.2, Warren Buffett is once again respecting his rules that he's established years and years and years ago and not repurchasing stock. So for the third quarter, Berkshire's operating earnings, which encompass profits from the conglomerate's fully owned businesses, totaled $10.1 billion, down 6%, right? So the operating earnings, once again, as I told you guys, largely has to do with the hit that the insurance companies took from, unfavorable writing on, assets that were pledged or collateralized assets from the aftermath of the hurricanes, right? So that's pretty much the moral of the story from all the Berkshire earnings, right? So now where do we stand? You will see that Berkshire still has a decent amount of portfolio allocation into several of the companies that we follow closely on the channel. Apple still has 23.4% as the main holding in the portfolio. American Express, we talk about it a lot. Now, Coca-Cola as well still has a considerable share there. These have not been updated, I don't believe, just yet from the new purchase, or actually they have, as a matter of fact. Moody's Corporation, right? He loves those toll booth companies, as he calls them, companies who, no matter what the economy is doing, they just continue printing money, printing money, printing money. That's Moody's Corporation and SPGI. He doesn't have SPGI, he holds Moody's. Another one we talk about a lot on the channel, Visa and MasterCard. So when I tell you guys that I'm buying Visa and MasterCard and hinting that possibly you possibly should be doing the same on some dips, Warren Buffett, the same, right? He's in these companies as well. BYD, the only car manufacturer, well, other than I assume Mitsubishi, but Mitsubishi has many other lines of businesses, especially industrial grade, like, kind of like Caterpillar has in terms of like big construction equipment and stuff like that. But BYD is kind of the only, well, I mean, they do batteries as well, right? But this one is one of the only 3 profitable EV manufacturers in the world. He didn't buy it only for the EV business, but I figured I should bring it up. Amazon as well. I'm not sure you guys know that Warren Buffett owns Amazon, but he does. New holdings, right? The fintech play from Brazil, and Heiko. Heiko has been one that he increased the position in just recently. He added about 0.75% in allocation. Heiko is a defense company, right? A very, very high quality defense company. And their chart looks like this long term, right? Very, very smooth, very, very stable. Right now, it's a little bit elevated for my taste. I like to find it in the 230s to 220s, but I digress. Those are just a few of the holdings that he has added over the course of this most recent quarter, right? So hopefully that makes sense in terms of why Warren Buffett is sitting on cash right now. He hasn't fully said this quarter in the meeting why he's raising a substantial amount of cash. We can get an idea, right? Number one is, yes, being a value investor, there's not that many good value deals in the market right now. We know that Warren Buffett likes to search for deep value, and there just isn't a lot of that in the market right now. But another thing that some people are talking about, but a lot of people are forgetting is, don't forget, guys, that Warren Buffett now is 94 years old, right? And unfortunately, he lost his former best friend and long-term business partner, Charlie Munger, just last year, right? So they're preparing, and as you've seen, they've been building the cash pile, guys, over the last 4, 5, 6 years. It's not for any reason, right? Yes, number one, there's no deals in the market right now. But number two, do not forget, right, that he is preparing and ensuring the continuation of his legacy. When, let's say, Warren Buffett passes away, hopefully not soon, right? Because he always provides amazing insights every single one of these earnings calls, even though he's in his mid-90s, right? Still fully there mentally, Warren Buffett. Eventually he does have to prepare, right, for him passing on and leaving the reins of the company to people under him who have been at the company possibly for 30, 35 years as well, but who are not him, right? It's tough to replace the man himself. So to preserve his legacy and set Berkshire up in the best possible way, in the event we get a significant market decline or he passes away and then there's a significant market decline, 1, 2, 3, 4 years down the road, or in 3 to 6 months, the company is extremely well positioned to benefit, to capitalize on such a decline, which will give Berkshire an edge over everybody else over the next 4, 5, 6 years. I mean, if you can plow $300 billion into the market when the SPY and the QQQ are down 25, 30%, individual companies are down 40, 50, 60%, and you find some deep value there, and you have the cash to do it, you will outperform the S&P and the QQQs moving into the next years as you're buying the dips, right? So he's ensuring the legacy of the business regardless of what happens to him and regardless of what happens to the markets, right? So that cannot be underestimated. Now, where do we stand in terms of Berkshire? Right? Well, who would I be if I would do valuation on Berkshire? Warren Buffett told you himself that he says that the company is a little bit expensive, right? So who am I to counteract what Warren Buffett says about his own company? He knows it better than me. He knows it better than all of the analysts that cover the stocks as well. All I can tell you, guys, is this is a company with fantastic net margins, extremely well-managed company. They have a ton of cash right now, and they are currently outperforming the market. Analyst expectations, although there's not a lot of coverage, do point that the stock should be in the next year over $500, and I do agree. We have expanding EPS curve right here. We have a very gorgeous revenue expansion curve as well. Now, in terms of where we stand on the technicals, guys, well, myself as well, the best area for Berkshire, if we're looking to buy possible leap call options, is indeed down here at the 420s. However, I am not opposed, and I have been starting some positions up here in the event we do not come down here, because right now, essentially what we're doing is we're trying to set up the monthly higher lows for further trend continuation. So we have some weekly support here, right? That is not to be denied. So I am building some positions here, but in the event we fall here, I will probably go a lot heavier, maybe with some leap call options as well, because I think the valuation down here will be a lot more manageable. But right now, guys, I mean, we can't really complain about this company, right? It's not the cheapest company out there, and they are currently outperforming the company. They are up 24% year to date. So right now, this for me, and I've added a few debit spreads, just a few, as you can see in my positions, right? We're in with a little bit of size, 2 contracts, which are down 60% right now, but I was running into this one with that expectation. And as we move through the levels, we get closer to my true buy zone. I mean, right now we're into it. I'm waiting for the elections more than anything, right? Because if the SPY and QQQ move down 2-3%, Berkshire will follow, and I'll just get better pricing. If not, it's very easy for me on a bounce from the S&P and the QQQs, right? Very easy for me to DCA up here as well. But if we come down here, this is big size for me. Probably going to throw a leap contract at it. So even though the call debit spreads right now are not doing the best, that is how I'm managing the position currently. I'm being patiently nibbling. And if we get my actual deep value level, that's when I'm going to be going very heavy on Berkshire. So hopefully that was insightful into the Berkshire analysis. It's the best I can do. Take it from the man himself. The company's a little bit rich right now. right? So if we come down to that 420, probably I will engage some heavier buy orders. But Berkshire is positioned extremely well right now. Nothing bad to say about them. So those are very long earnings recaps for both Palantir and Berkshire because both of them had notable things to say, right? So I think it's important that we cover them in a bit more detail than just going over them for like 2-3 minutes, give you guys the numbers, give you guys the levels, no justifications, no clarifications whatsoever, and just move on, right? There's no benefit in that, in my opinion, guys, at least for having watched myself, so many other financial YouTubers as well. It serves no purpose. You just like these guys give the levels. They give the levels. They don't give any context. They just report the numbers, beat EPS, beat revenue, good free cash flow. They give the levels and they just move on. Then you end up with 25 people in the questions asking for context. You know what I mean? So I prefer to spend the extra time, give the context so that it makes sense for you guys. And hopefully you agree as well. Probably why you're here watching the longer videos. So thank you very much for that. Let's move on. So SPY down about 0.22, QQQ down about 0.29. Let's do some technicals. So we know, guys, that the election results are going to be tomorrow night into Wednesday morning, right? A few swing states can take a bit longer to report. They're saying that if it takes a bit longer to collect the votes and everything like that in Pennsylvania and Wisconsin, the final results of the election could be pushed out to late Wednesday, potentially even Friday morning. So let's hope we get some decisive results before that happens to kind of take away the volatility in one single day, right? So the QQQ and the SPY, they're going to move like 2% either way. So very tough for me to derive some short-term price action levels in terms of, where I think that this can go, right? Because if we move 2% up, perfect, but we're still in daily downtrend, right? We know that we broke through this ascending wedge, and I've been telling you guys, you break a 3-month ascending wedge, you're probably going into a bit of weekly consolidation. And as you can see, we're on week number 3 of consolidation right now. So 2% move on the SPY to the downside. Daily downtrend just remains intact. And we look at 563 down to about 558 to act as that line of defense. That would be literally about 2% away down on the SPY. So watch closely how they react to this level, guys. It is a big, big, big weekly level of prior resistance, should be current support. So watch very attentively how we break through there. The next line of defense is at the 26 EMA. This is where I'm going to be going shopping for a bit of SPY leap calls. I love going shopping for SPY leap calls when we have a correction and brings us between the 12 and the 26 EMA on the weeklies. Usually when you get those, they are very decent buying opportunities for some longer dated SPY contracts. Couple that with potentially, daily close to being oversold conditions, and you get the weekly flush down into here, and you get a recipe for a very good location for potentially leap calls on the S&P. We will take this one day at a time, but the short-term bears are in control right now. Just understand the long-term bulls still have a lot of space to work with before jeopardizing this weekly higher low down there. Moving on to the Qs. So the Qs, same analysis, right? You guys saw the expected move. It is massive for the week, 2.6%. So same analysis, right? We broke down from the rising wedge. So now we do have a bit of a daily move down right here. If you break the lows of the lows of last Thursday, it will be a daily confirmed downtrend. We do have support below us, 480 down to about 475. And lo and behold, that is literally your 2.5% away on the QQQs, right? But if we get it to the upside, well, we'll just be back within the context of this rising wedge, and we have a lot of resistance to deal with there first. So we will see how the markets move after the election. But for now, I do have a bearish leaning bias on the markets, guys. Why? Just because we've already embarked into weekly consolidation. It's much easier for the bears to have follow through continuation than it is for the bulls to kind of reverse this damage that's already been done, right? So I have a bit of a bearish lean for the markets. You saw it last week, right? Last week we had good economic data, no big red flags, and we had very good big tech earnings, and the market didn't care. They used any little pain point they could find to drop the markets just the same, which is exactly what happens after 5, 6, 7 weeks of rally, right? You need a pullback, and any pretext, any excuse is good to drop the markets a little bit. So in the event we continue dropping anything above 449, just looking for a weekly higher low for possible further trend continuation. So keep that in mind, guys. I am of the opinion that we need to just wait and see, right? If we get the drops and start moving into daily, slightly oversold conditions, just as we got back here, the month of April as well. If that starts happening, you will find some crazy good deals, not only on the indexes, but on individual big tech names as well. So that is what I'm saving most of all my buying power for. I'm not trying to predict the results of the election. I'm not going all in prior to the election, trying to gamble on the results. Not at all, guys. I am waiting and seeing on the other side. If for whatever reason we start rallying after the elections on the Qs and on the SPYs, No problem at all, guys. There's so many good companies right now that are at low levels, and one day of upside is not going to take them away from their lowered levels. Think of Google, think of Microsoft, right? Companies like that, it's not going to take one day to get them out of their low points right now. So just keep that in mind. We have tons of time, guys, tons of time to go shopping, regardless of the results of these indexes by the end of the week. So please keep that in mind. Be patient, save your buying power for the best possible opportunities. Channel your Warren Buffett, right? Respect your strategy rules. Don't get greedy. Wait for the market to come to you. So moving on to XLF. XLF confirmed daily downtrend right now. So we know that we're already in weekly consolidation. Talking about this for a few weeks running at this point in time. Weekly uptrend is still maintained. Anything at this point above 44.63, looking for a weekly higher low. Coming into confluence right here, 45.90, let's call it confluence with the 12 EMA. So the bulls are having a reaction zone coming up soon, but they need to get their butts in gear, right? We need to start getting some hourly trend changes, get an end to this daily downtrend motion right there, and try to take back as much as possible of this downswing to reset the daily uptrend. So we'll keep a close eye on our hourly trend changes, but as of now, the daily bears are in control and still just in relatively healthy weekly consolidation, in my opinion. Healthcare, going to move through this quickly as well. You know, perpetual downtrend on healthcare, still trying to find a local bottom, right? Can they get the daily uptrend underway? Well, they don't have a lot of space here, guys, right? We need to get the hourly back. Absolutely need to get this hourly time frame back. Or not, guys, it's going to be curtains for the bulls pretty much. They're going to roll this over, test the lows, or maybe even roll over a little bit further, perpetuate this weekly downtrend as well, which has been, this sector has been a lead bear. They were the lead bull leading into the tech to value rotation that we saw late or early July, right? Tech to value, this was the leader. And now they have been the leader to the downside as well. So even though we have a weekly downtrend right now, we are coming into somewhat daily oversold conditions. So we're expecting a bounce into support as well. So let's see if the bulls can get it together. All in all, though, we're still looking for a monthly higher low for further trend continuation. So we'll see how they respond to this level. Got a lot of price action right here. Anything above 138, looking for that monthly higher low for further trend continuation. My favorite name, which is maybe coming into my level, guys, my favorite name right now that is still, you know, at a relatively attractive price action level is UNH, pulling off the breakout retest on the monthly. So 550 to 525 could be a decent spot to maybe take a little bit of a swing trade on that one. Now moving into SMH, give me a brief moment. You guys know the drill, right? The classic coffee drink. Moving into SMH right now. So SMH, not doing much of anything, right? Inside candles with Thursday's trading. So just the same, right? Rejecting from resistance 260 down to 251. Nothing to see here pretty much. You could argue that it is kind of a daily downtrend, and I would kind of agree, right? If they flush Wednesday, that is a confirmed for sure daily downtrend. And we just continue this weekly consolidation that we've now been in for roughly 2.5 weeks, right? The bulls are still in long-term control of this uptrend, and we are coming into support below us, 238 down to about 231. So keep an eye how we react to this zone in the event we pull back into it with more tech weakness, more S&P, more QQQ weakness. I'd like to see this one pull into this area and the bulls start to play very good defense. The way that I'm playing SMH, guys, is I'm writing put options on my favorite semiconductor companies well under the market, guys, benefiting from the increase of volatility, not only in the VIX, but in semiconductors as a whole, as the sector is out of favor. So I'm writing puts on AMD, well below the market. I'm writing puts on NVIDIA, well below the market as well. And if TSM starts pulling back in a significant fashion too, right, I will be writing some short puts well under the market as well. So just keep that in mind. That is my best strategy that I'm using for semiconductors as we continue in this consolidation phase. Now moving into the Russell. So the Russell still doing not much of anything, right? Sideways consolidation, break the lows of last Thursday, and you just continue this daily downtrend, which is what the bulls are trying to prevent right now. In the event we break that, guys, we are still going into extended weekly consolidation, right? You can see the loss of momentum in the last couple of weeks. They're trying to maintain as best as possible the tightening range. If you flush this zone, however, and you flush 214.58, you will get a weekly confirmed downtrend and you will be retesting 214 down to about 207. So keep that in mind. This is an area that I would not mind visiting this trade once more, but here trapped in between, right? Equidistant between the resistance zone above and the support zone below. There's not much risk reward on this trade right now, so I really need to come down here for me to get interested. Moving into the Dow Jones lastly, so the Dow Jones still consolidating, still a daily downtrend, right? Daily downtrend in motion, another leg down with the flush of today, flushing below our current support level and flushing below the 50-day EMA as well. So this is signifying weekly consolidation, right? So good thing the bulls have tons of space though. Nice weekly uptrend, looking for a weekly higher low. Anything above 40,000 roughly going to be looking for the weekly higher low. And I do really think that if we continue plunging here, this area, guys, 41.3 down to about 41,000 should be a relatively solid area. Much more defense to be had by the bulls there. And the 26 EMA is right there as well. You can see that the Dow Jones has not really lost the 26 ever since embarking on this rally last November. So this should be a fairly solid point here. And if we do come down there without much momentum to the upside, right, you can find daily is going to be pretty close to oversold. So we'll keep a watch on that one for now. In terms of yields, well, we obviously have an interest rate decision by Powell on the Thursday session. So get a lot more information there. But as I said, right, yields are a very, very, very tough trade right now. We broke above the downtrending trend line. We also negated this weekly downtrend, right? Boom, blasted past. And even the monthly right now, I mean, it is a monthly, looking for the monthly lower highs into lower lows. But as I've been saying, right, there's no reason that they have to do this. They can just stay sticky around here. As long as we have this, US debt narrative is out of control. The inflation is going to remain sticky narrative as well. Rates higher for longer. I mean, they can speculate on this curve as much as they want. You know what I mean? They can speculate on the curve as much as they want and keep this rate somewhat elevated, right? We're now above the most recent area of resistance, which is now support. So even though I want to see the rates decline in a rapid fashion, unless we get some really bad data that points that we're heading towards a recession and that the Fed's going to need to accelerate the pace of rate cuts, there's no need for the longer term end of the curve to come down in a rapid fashion unless there's pure panic towards the economy, right? The short end of the curve is going to come down in a decent fashion in line with the rate cuts, right? That's perfectly normal. But the long end of the curve, guys, there's a lot of things that go into this trade. Supply and demand of the bonds on the open market. Is the Fed buying them as well? Are foreign governments buying them as well? Like, there's just so much, guys. So we'll keep this one on the back burner for now. Today, decent little win for the bulls, but there's a lot more. Decent win for the bond bulls, of course, but we're still super low, guys. And I'd just take this trade very, very carefully if I was you. I would, prolong my expectations. If you have a time horizon where you want TLT to rise, I would extend that time horizon a little bit because there's just so much uncertainty in that trade right now. A lot of moving parts, right? Bitcoin, moving to the Bitcoin trade. So Bitcoin as well. Bitcoin unfortunately giving back most of the move. But as I've said, guys, the weekly candle close as well. This is a quite ugly weekly candle close. You know what I mean? If we put on the Heiken Ashi candles, we can cheat, right? You can say that, the averages, this was a very high average close. You throw on the Heiken Ashi candles, it looks glorious, right? Still very solid, which it does. And the weekly MACD as well, which is your 6 months worth of momentum switch indicator, right? MACD crossing a positive territory. So this one's looking nice, but in the past 4 or 5 days of price, let me turn these normal candles back on. Nothing wrong with the Heiken Ashi candles, by the way. If you're looking for who's overall in control, and sometimes on the charts that are volatile, just to get more clarity, nothing wrong with those at all. But to move down on Bitcoin like this to me is just a de-risking trade. Why? Because of the risk of the elections, right? I said it before yesterday in the top 5 options video when I was looking at BITX. The reason, right, that Bitcoin's been coming down is because Trump's odds of winning in especially the betting markets have been coming down. Now we know those are kind of skewed because of large bets in the market. Kamala Harris odds have been coming up significantly in the last few days of trading on those betting sites and whatnot. In the legacy media polls, it's been pretty much neck and neck. So I don't think that the pain in Bitcoin has been coming from there. It's been coming from Donald Trump's odds plummeting. And why is this bad for Bitcoin? Well, I'm not saying that the Democratic Party is necessarily negative towards crypto. If anything, I'll remind you, this entire rally we've had has been under a Democratic government, right? Under Biden, essentially, right? So it can rally during a Democratic government. That's not the point. It's just Trump has been a lot more vocal about, enabling more things for cryptocurrency during his political campaign. That is quite obvious, right? People associate crypto with Trump right now for that exact same reason. So that's why, it's a bit of a narrative going on right now, a bit of a push and pull between the narratives, a bit of a risk on move on Bitcoin. But overall, this one is still looking healthy, right? On the weekly timeframes, looking good, looking for the weekly higher lows, anything above 58,005, just looking for a weekly higher low, rejecting from resistance as well. So no secret there, couldn't close the weekly above. So if anything, this move down, guys, if we do pull back down hard, let's say for whatever its reason, Trump loses the election and Bitcoin has a significant move to the downside, I mean, I'm a buyer down here. This doesn't change my long-term thesis for Bitcoin at all. If anything, it gives me a gorgeous buying opportunity down there, and I'll be using BITX, writing put options on BITX well below the market to go through that strategy. So hopefully that makes sense. Now moving into our big tech names, let me just do one thing first. I want to refresh the portfolio here because it's going to log me out. I know it's going to log me out. So let me just refresh the portfolio real quick here. So you can actually get this running after we do it. All right, perfect. So the last thing I want is for this one to just kind of come undone on us, as it always does. So moving into Apple right now, down about 0.40%. I mean, Apple's not looking the best, but it's not looking the worst either. We do still have support below us, right? 219 down to about 215. The daily bulls have lost the uptrend, of course. Daily downtrend is confirmed. They have lost this big area of support as well. They've lost the all-time high breakout too. And the Warren Buffett news definitely doesn't help either, right? So weekly, they've unfortunately lost the weekly higher lows too. So if they want to get this weekly back in motion, well, one thing they have to do first, need to get the daily uptrend back. So as of right now, looking for the daily uptrend. First things first, need to get the hourly uptrend in motion. They've started the hourly uptrend. Let's see how high they can take it. If they can take it, 50, 60% of this move down and then get rejected by resistance, they have a chance at resetting the daily uptrend. But if the hourly uptrend falters and rolls over here, right? If you only get, another day of hourly uptrend and then it rolls over, that's going to be a very weak bounce when measuring on the daily, right? Usually you use the fibs for this on the daily. Measure the size of the daily bounce until the hourly trend rolls over. And if you only have a very weak bounce, 23%, well, the probabilities of revisiting the lows, guys, or flushing lower are very, very high, right? The bulls just didn't get any momentum at all. So at that point, we'll be looking to lower end of support down here. And if they really start flushing hard, I'll be looking down here, guys. 210 to about 200 is where I want to play Apple. I've been holding back because of the valuation, right? The valuation is very, very high for Apple right now, and their revenue growth has not been the best. And no secret at all, we touched upon this on the earnings, right? 19 billion in buybacks. I swear to goodness, guys, most of this move on Apple was buybacks. Warren Buffett was selling. Not many people were buying Apple up here, guys. Apple was buying Apple up here, right? So you got to take this price action with, a little bit of a grain of salt, right? Fair value for me for Apple, I mean, this is generous fair value. Keep that in mind. Fair value for me is really down 210 to 200. I wouldn't mind, but anything above that, guys, even though it might seem like there's a little bit of a bid trade here to get some, it's just not my favorite trade right now. I think there's much better companies to spend our money on, personally. Moving into AMD right now. So AMD down about 0.81%. The slide just continues on AMD. Nowhere near daily oversold right now. Hourly has just been oversold for the last 4 days of trading, right? No hourly uptrend whatsoever. So if you want to know when this daily trend is going to finish, I mean, we're in an area of support right now, 140 down to about 127. So there should be a reaction from the bulls sometime soon, but where you really want to see that the daily is done dropping is you need to see a reversal in the hourly time frame. Give me an hourly uptrend, then you can say, okay, the daily swing down has bottomed, and then once again we look for the size of the move. How high does the daily bounce get in relation to this big move down? And then we can then gauge, okay, have the bulls taken back 50%? Perfect. They stand a good chance of recapturing the daily uptrend. But until that time, it is full daily bear control right now. And also the weekly guys, they've now given back most of all the weekly candle, the weekly momentum, right? This weekly candle close is fairly brutal. I would not be surprised at this point if we do revisit the lower 130s. That's how it's looking right now. So we may find a bottoming out process in this location. My favorite way to play this stock, once again, is writing short puts significantly below the market just to benefit from this added volatility and get a really good entry if ever we are assigned. We get some good premium, we get assigned at a good level, and it just prevents us from trying to constantly time the bottom, right? Moving on to Amazon right now. So Amazon as well, pulling back, right? Are they going to do a Google and give back their entire earnings move? Well, if the SPY and QQQ drop as I'm possibly expecting them to do over the course of this week, they probably will give back the entire move. Now, is that a sign that Amazon is finished and that the company is doing poorly? Not at all, guys. It's just a sign that the market is very timid right now and looking for any excuse to give back some of the positive of momentum that we've been having over the past 5-6 weeks. That being said, daily uptrend is nice. We're going to get a breakout retest trade. If we come back down here and test the 190, 187 as support, guys, I'm probably going to throw a leap call option at Amazon down here, but I'm also going to be looking to aggressively write some short puts on the stock, talking about maybe the 187, 185 location. Would not mind picking up shares of Amazon here and riding them to the upside, and even getting some leap calls. Weekly uptrend is looking very gorgeous right now, so no risk of any losses there either, right? It's just a very nice weekly uptrend at this point. So at this point, anything above 183, just looking for a weekly higher low for further trend continuation. And this 187 to 190 is a very strong level, right? The 12 EMA is there as well. So I do think the bulls have a good chance of playing defense down below here. So that's where I'll be looking to go shopping for the stock myself. And of course, above resistance is the 200 psychological. Moving into Google right now, Google down 1.14%. They did it. They gave back the entire earnings move. Is it because the company is doing very badly? No, the earnings were fantastic. We covered them on the channel yesterday. The PEG ratio right now should be sitting around a 1.2. We did the valuation at 180 all the way up here, and it was cheap. So I assume down here it's even cheaper, right? Which it is. Fantastic valuation for Google. No problems with the company, just a byproduct of overall market timidness right now. So daily looks good. Daily breakout. Now we're retesting. Now they might lose. This is why I did not change this red box to green, because we did not close a weekly candle above it. So it is still resistance. So conflicting time frames right now. The daily's looking good at this point. Anything above 163, looking for a daily higher low for further trend continuation. And the weekly, though, the weekly is looking a little bit mixed, right? We got a nice weekly pop, but we gave it all back. So at this point in time, guys, anything above 161, still just looking for a weekly higher low for further trend continuation. I think Google is kind of just going to be, finding a base of support down here, roughly the 168 down to 165. Same area that it was trying to find a base the last 3 months, except for this move right here, of course. This is where an area that I love playing Google, 167 down to 165. Short puts all day, and I will be looking to add some leap call contracts on this Google trade if we revisit this area as well. So nice little area, guys, to build a position for a long-term or even a medium-term swing trade, in my opinion. Meta also continuing its decline. Meta had fantastic earnings, and yet the stock is still down. So it just goes to show you guys, earnings are a casino, right? If Wall Street wants to bring the stocks down to make the SPY and the QQQ consolidate and get everybody nervous into the election week, that's what's going to happen, right? Nothing we can do. Now, all we can focus on is, do we think the market's wrong or not? And I think the market is wrong for dropping this stock. So I do think that this is possibly a buying opportunity. So the daily trend right now is very, very, very messy, right? Now, they have lost the whole daily push. So daily uptrend potential is now lost. Testing the 50 MA. If we continue dropping, the chart that makes the most sense here, guys, is the weekly. Look at this beautiful weekly uptrend right now. Looking for the weekly higher low, anything above 493, looking for that weekly higher low for further trend continuation. So I'd be looking down here, 531 down to about 520. If we get this whole, 535, let's call it a 520. If we get the retest area, I'll probably be loading up with either some swing trade shares, maybe some call debit spreads, or maybe even some 6 months slightly out of the money call options, right? Because I do believe Meta, come February, March, April, guys, this company is probably going to be pushing $600. I would not be surprised. So if they give me an entry opportunity around this support, I'm probably going to take it and go for the trend continuation trade. Moving on to Microsoft. So Microsoft as well, dipping today too, right? 0.47% to the downside. I mean, Microsoft, the same thing, right? They lost the daily uptrend with the earnings move down. We're below the 200-day EMA, trying to find a base of support. But in the event that they flush, they did not flush today and close below. If they do close below, though, guys, 406, daily downtrend is underway, and we look to the lower area of support to act as our last line of defense, essentially, right? As it has been doing the entire year so far. So if we drop further into this area, this is where I'm going for more leap call options. You guys know I bought one leap call option right there. I loaded up with a bunch of call debit spreads as well in roughly the 415 zone. Some of them are down a little bit. I had 2 of these. I took profit on one of these before earnings. Now I'm down on the December ones, but these ones for February, 435, 440s, they still have a long duration to run, right? So I'm not nervous. If anything, I'm going to add a leap call contract down here and even look to write some put options. I know it's expensive to do on Microsoft, but I do feel that it's well worth it in this lower area of support. So we'll see how it goes. The weekly right now, kind of just trapped in this tightening range. Same thing as here. No real direction right now for the bulls, just trapped between the overhead resistance and the below support. But I do think it's a great buying proposition down here. So that's how I view Microsoft. Now, moving into Netflix, give me another brief moment. So Netflix down about 0.08%. Not that big of a deal, right? Up a little bit in the after hours. Netflix just doing nothing, guys. So once again, if we break 744 to the downside, daily downtrend is confirmed. And then we look possibly for a little bit of weekly consolidation. Where could we come into? Well, possibly this location right about there, right? Previous resistance prior to earnings should be newfound support at about the 720. But just understand at this point, guys, anything really above 664 is just looking for a weekly higher low for further trend continuation. So no red flags right here. If anything, if we do drop down below here, guys, and maybe go for the earnings gap fill, I would not be opposed to adding a little bit more swing trades on Netflix. Love this stock, love their earnings. I don't think they're going anywhere right now. Just maybe pull back with the overall market. It would not surprise me for Netflix. Moving on to NVIDIA right now. So NVIDIA up about 0.48%. Nothing much to see here either, right? Just kind of consolidation mode. NVIDIA in a daily downtrend right now has to be notable. So setting up for the lower high, you guys see, right? Hourly uptrend. Now, if we lose the hourly uptrend into tomorrow, you guys know the drill. Lower highs are set. We're looking for the continuation of the daily downtrend, which could bring us back into the 130 to 126, which is the most relevant area of close resistance, which is now going to be acting as support. And consequently, because we are in a daily downtrend, we know that the bears are looking for the possible flush down here. But what are the bulls looking for? Anything above 102, looking for a weekly higher low for possible further trend continuation. So I will continue to write short puts, guys. 120 down to 110 prior to earnings, but even into earnings, I think that this is a very good area to be building a position on NVIDIA in. The big tech hyperscalers, guys, they gave it away. They gave it away. Last week, you heard it from all of them. They are spending more and more and more money on these NVIDIA GPUs. So NVIDIA's demand for this quarter and at least the next 3 to 4 quarters should be quite good. So that's why I'm going to continuously bid one of the most favorite AI and semiconductor chips in the entire world right now. Moving on to Tesla. Tesla struggling still today, 2.47% to the downside. And we've been talking about this, right? Rejecting at the 265. Now, for how many times have they rejected the 265 this year? 6, 7 times, right? So it's a very challenging area. Not that Tesla didn't have very good earnings, which they did, but now consolidation mode underway. We are coming back literally into the area that I pointed out last week, 240 to 235. This was overhead resistance for a couple times. The gap was right there as well. Another gap in that area, right? They really don't like closing in this area. So we'll see. Can the bulls defend this? We're coming in, guys, to, the area of cannot lose for the bulls. Because if you lose 235, guys, it's more than a 618 retracement. You remove a lot of the momentum capacity for the bulls to do the full V shape, right? If anything, if you pull back over 61%, the best the bulls can get sometimes is just a tightening range. You got to build up more momentum before making another attempt, right? The worst case scenario, pull back too much, and you open the door for the bears to do lower high into lower low flush, right? So that's why we're coming into the last lines of defense for the stock. The bulls need to get their butts in gear, definitely. So Tesla, in the event, we're looking for also the weekly higher low too, right? Anything at this point above 212, looking for the weekly higher low for further trend continuation. If the markets really fall off a cliff this week, we smash through here and we give back most of the earnings move, I will be looking to possibly write some short puts below the pre-earnings level, which should be about 210. With the volatility, I think this should be an easy trade. I don't think we give back everything, but if we pull back hard into 230, guys, it will open up the 210s, maybe with a week worth of time, 2 weeks worth of time. And I think that's the easiest trade that I can do on Tesla is writing short puts down here, getting some premium, benefiting from the volatility. And that's just it for this stock right now, but very challenging right now, guys. It's in between two areas, right? Now in between the 265 and it's like equidistant, right? So when we have equidistant level, guys, it's very tough for me to say that this is a decent area to build a long position, right? The risk reward, what's the risk reward? I mean, you can set a stop loss below here and go for the highs. Yes, that's one trade. You know what I mean? But it's not looking the best right now for the capacity for the bulls to just erase this drop and just smash through right there, right? I think if anything, it's going to look something like this. And I'll be looking for the breakout if we do something like that, more so than trying to time it from here, right? Moving on to Palantir now. Lastly, so Palantir, we already did the analysis on earnings, but just for the technical analysis, right? Where do we stand right now? Right about here. So Palantir was in daily consolidation mode. Now they've got it all back. So the bulls with an engulfing move at this point, we'll be looking for any consolidation, just looking for a higher low, anything above 41, looking for the daily higher low for further trend continuation. We're going to be using all of these guys as support below us, a bit like Netflix, right? This looks eerily like Netflix prior to their earnings, and I'll explain, right? Nice uptrend into earnings, loss of the uptrend into earnings, and then blast through. And then we can use prior support as the fallback area, right? Look at Palantir. It's the exact same setup, it's not a mirror. It doesn't look identical, but you guys get the idea, right? It's kind of the same thing. So I think that this area is going to be, once again, acting as support for the stock to pull back below, but the bulls in absolute full control right now. They never lost the weekly time frame either. This whole weekly zone will be known as the weekly higher lows, and they will start, with this breakout right now, starting a new weekly leg higher. So your new weekly higher low levels become these lows right there at about 40.63. The bulls are in absolute full control. We will watch how they react tomorrow after earnings through the election cycle, and in the event SPY and QQQ sell off a little bit, we'll see where Palantir kind of levels off after everything. But for me right now, at these higher levels, no trades at all. But I did make a few trades, which I'll give you guys in the portfolio right about now. So that's everything we had to do with our stock list. Now let's get into the portfolio. So you'll see, guys, that I haven't traded much of anything. I have literally almost full buying power in this account right now. So we did a full portfolio recap on the Friday session, going and explaining every single one of these positions in detail. I've touched upon a few of them, such as Berkshire and Microsoft, during today's video. But if you haven't seen my reasoning behind all of these current positions that I hold, I did it last Friday at the end of the video. So just go take a look. I spent 15-20 minutes on it. We're not going to spend that right now. We're going to go through these in like 2-3 minutes because there was just no trades, right? So BITX benefiting from the volatility when Bitcoin was on a big dip today, right? So the ones with a blue dot, that lets you know that it's it says it right there, change in position size in the last 24 hours. So it's a new position, right? So I already had a BITX position leading into this week at 29, which is roughly Bitcoin 65,000. Don't mind being assigned there, guys. I get $1 in premium, literally 3% for the entire week. I don't mind being assigned there. My average cost on those would be 28. Then I went with the 25 puts. 25s for Bitcoin, guys, is like Bitcoin 60K. That is a heck of a drop, right? So Bitcoin, BITX, $25 puts, pure volatility move. And even so far away, guys, BITX right now is, 31, let's call it, right? In the post market right now, 31, down to 25 by the end of the week. That would be a 18% decline, 9% decline in Bitcoin from its currently already retraced price, right? So when got 45 cents, that's literally almost 2% for the week. I'll take it, right? So I'm just farming premium on these in a somewhat conservative fashion. Leading in, I would not mind buying Bitcoin down there and riding it higher. That's why I'm writing them there. Other than that, we just did some earnings trades. You guys might remember, if you watched my top 5 options video yesterday, I like to run the 2 times standard deviation move for earnings. Essentially what it means is if HIMS has a 15% expected move, I go 2 standard deviations away. That's exactly what I did. You guys may think it's a little bit conservative, but keep in mind, guys, you may think it's a bit conservative until the one time where you get a little bit too greedy and you end up with a 3 standard deviation move like CRM did. Worst earnings day in 15 years. Or you end up trading Nike at 1 times the expected move or even 2 times the expected move, and Nike gives you their worst day that they've had since the IPO on their earnings. Or you end up trading Pinduoduo because you think that they're doing really well and Temu is crushing it. They've been crushing it all year and bucking the trend of other Chinese companies, right? And the expected move on Pinduoduo is like 9%. And then you write 20% away, and then the stock goes down 30%, right? So you guys might think that I'm conservative in the way you do this until you end up with a nasty earnings surprise that erases the past 1 to 2 months of all your other earnings plays. So that's why I'm always cautious in the way that I play earnings, right? It's just a preference. So HIMS, the trade on HIMS was $15 puts, which were literally at that point in time 30% away, guys. The expected move was 15. They were here before the close. I went literally 30% away. Call me conservative if you want to. There's no problem at all. It's easy in hindsight to look at HIMS going up and say, oh, well, you could have written them down here. That's decent support. Yeah, but guys, I don't want HIMS down here. That's not a very big level of weekly support, is it? I mean, you can argue that it's somewhat a level of support, but it's very, very close and very aggressive, right? I want the prices on a stock that I want. The price that you want HIMS is different from the price that I want HIMS. I don't necessarily want to be assigned this company, guys. And I also don't want to get super close and take like a $500 loss on 2 contracts on a $1,800 stock. You know what I mean? It's just not the way I like to trade. I don't like taking losses, guys, on earnings, right? If I can avoid them. So I went all the way down here because I would not mind being assigned HIMs down here at 15. It's a relatively low price and it would be a huge drop and would be daily oversold. Everything would be oversold, right? Which we can probably get a bounce from here. So that being said, I went with the HIMs, 15s, and how much did I get for them, guys? I got $15. So I literally got 1%. You know what I mean? I got 1%. I respect my 0.5% per week minimums. I can close this trade worthless tomorrow and we just move on. So we collect $30 right there. It's not the dollar amount that matters, guys. It's the ROI, right? I have the size if I wanted to. I could have thrown 10 contracts at this, 20 contracts if I wanted to, right? That's not the point. The point is the ROI per day. That's what's fantastic about that position. And the other position that I took as part of my 2 standardization moves in terms of earnings was Palantir. Palantir had an expected move of 12.5%. So, staying true to my rules, I went with 2 separate contracts. One were, as you can see right here, the $33 strike for earnings. We got 26 cents, which is almost 0.5%, right? Not quite, but almost 1%. It's well over 0.5%, but still respects our rules. And the 31.5s for literally 0.5% as well, right? So I'll show you what I mean. The expected move on Palantir was 12.5. So Palantir, I want Palantir in the low 30s. That's just where I want the stock. You could say, yeah, but you could have written the 38s, 37s that got way more premium. Guys, I don't want Palantir up there. If you guys don't mind being assigned up here, even if the stock plows down below there, right? Be my guest, go aggressive on these earnings if you want to, right? That would have been not even one expected move away, right? You'd have been very aggressive on these and you would have gotten tons of premium. It's very easy to say in hindsight that you could have done that, right? But as I showed you, for every earnings that goes up, you can find a handful of ones that go down well below the expected move and you'd be losing a ton of money, right? So hindsight is always very, very easy. I went with the 33s and the 31.50s because if ever we came down there, I know it's a big move, but if ever we come down there in 1 week, I get to buy shares down here at a crushed price at daily oversold conditions, and I'm happy with the trade and I'm happy with the level, right? So $33 is literally, 20% away, not quite 2 times the expected move. And my 31.50s, they are indeed 2 times the expected move, about 24.5% away. So that's the way I played Palantir, and all those result in wins. So I get to collect 2 times 26 and 2 times 14 by tomorrow, plus the amount on HIMs. So very easy and slightly conservative. Well, not easy, because sometimes you can end up with surprises, but a conservative way of playing earnings, just the style that I play it. There's tons of different ways of playing earnings, guys. That's just the way that I like to play it myself. So those are all the recaps for today, saving all my buying power. There's some great opportunities, guys. I mean, we still have all of these positions, right? For the wheel trades, still have the NVIDIA 120s. We're doing nicely on those. We still have the Google 167.5s for this week. We're doing okay on those as well. In terms of other wheel trades, we got the BITXs rolling as well, guys. But I have full buying power because in the event that the elections bring in the volatility and the SPY and QQQ drop a lot, I have more buying power. I can buy Amazon down here with maybe some leaps and some short puts. I can buy Microsoft with 40,000 in buying power. I can write a short put down there. I can buy another leap. So many trades will be opened up to us, guys. And I'm also going to play a lot of these other earnings trades this week as well. I circle the ones that I'm probably going to play. So I have a ton of buying power for a ton of different plays this week. Just in the event the opportunity arises, right? I don't want to use all my buying power on the Monday, leading into elections, leading into potential drops, guys. It's just not my style. So hopefully you appreciated today's video. That's everything I had for you guys today. So in the event that you did appreciate today's video, consider dropping a like. If you appreciate it as well, or consider subscribing to the channel as well. If you're new, would love to have you guys back here. We do these videos every single Monday through Friday after the close. So hopefully to see you back in a future edition of the videos. And in the event you have any questions, of course, always feel free to ask me the questions in the comment section. Usually I get back to you guys in the next 24 hours. And in the event that you want all of these trades in the real time, right? These are all the trades that we've placed in the last few weeks. As you can see, the win ratio is relatively high, right? And even last week, we closed some losses that we've been holding for the last 2 weeks. The losses were super small and the wins were very, very juicy. So in the event that you want all of these trades, plus the earnings trades and everything like that, the link to the Discord is down below. We also do daily market live streams in the morning for about an hour or two. We also give I give a ton of trade ideas. We have the journal prep as well, private videos, and so much more. The chat rooms where you guys can ask me all of your stock and option specific questions all throughout the day. If you guys are interested, the link is always down below. And if not, well, I guess I'll see you back in another one of these videos, guys. Take care. Have fun this week. Don't get too greedy. Channel your inner Warren Buffett. Wait for the market to come to you. Wait for your specific stocks to come to you. Do not chase the market, guys. It is not a winning proposition over the long term. So take care. See you tomorrow, and peace.